Hey everyone, welcome back to Earnings Call. My name is Jeffrey Beamer. I'm the senior investment strategist over at ewotrader.com. And if you are not familiar with what we do here, we talk about companies that have upcoming earnings announcements. But more than that, we talk about how to profit from those earnings announcements. So here we are, the week of April 21st. We are into really the first full solid week of earnings. We started about a week and a half ago, but now we have over 400 companies declaring earnings this week, and I'm focused on about 86 of them. So, I mean, we're kind of getting into the meat of the earnings season, and things are very busy. And you're going to recognize some of the big names that have earnings this week because we could have some potential market movers. And you'll want to hang out towards the end of the show when I talk about a open position that we finally closed out last week. We also closed another trade last week, which was our trade on DR Horton. You're going to want to see how that turned out. And then I have a new trade for you this week. You're going to want to hang out to see that. So let's get rolling. Now, we do talk about a lot of stocks here on Earnings Call. So if you want to use the chapter feature at the bottom of this video, that comes in handy so you can jump right to a particular stock that we're talking about. And we don't drill down into all of the minutia about what analysts think. We talk about what the market actually tells us. Okay. And we are looking at what option traders, the option specialists, are pricing into the options going into earnings, because that gives us a good insight into what's called the expected move of a particular stock. So here you see our list for this week, and you do see some big names on here. Everybody from Comerica to Tesla, Verizon, Lockheed Martin, IBM, Texas Instruments, Chipotle, Intel, PepsiCo, Union Pacific, Google or Alphabet, and others. So let's get rolling. And what we're going to do is talk about each side of the ledger here, and we're going to talk about stocks that are going to possibly break out and stocks that are going to potentially consolidate here. So let's begin with the quiet side of the list. Stocks that we think are going to consolidate through their earnings. And again, that's not us. It's what the stock usually does and what market makers think. And let me show you an example of what a quiet stock is. All right, now this is Pfizer. This does not have earnings this week, but this is just a really good example of a stock that is normally really quiet through the earnings cycle. As you can see here, the stock is trading at about a $6.5, $7 range. And through the earnings announcement, the stock is moving single digits, meaning each earnings announcement, the stock might move 2% or 3%, just really not much. And we have a certain strategy or a series of strategies that we do to capitalize this. Okay, we get into selling premium around these earnings events because then we can capture high implied volatility and sell that to our advantage. And that's how we give ourselves an edge. And when the earnings announcement happens, that IV drops. And these are great ways to make money on quiet stocks. So let's take a look at our list this week. And I'm going to highlight a few stocks for you here. Let's begin with, and actually I'm going to pull up really the first stock on the that I wanted to discuss, but it's not on my list. So I'm going to go ahead and throw it up here is Comerica, because they had earnings this morning, and you can see that the stock, it had an expected move of about 4%, but with this added volatility around the market, you can see that it's down 6.2% on the day. So still single digits. But again, we don't expect a big move, and a big move in our book is double digits, anything really over 10% or more. All right, so Comerica had their earnings announcement this morning, and then let's get into some of these others here. So Verizon, they're going to announce their earnings announcements on Tuesday, April 22nd, so tomorrow before market open. So first thing in the morning, and the expected move here is less than 8%. You can see the stock is down 2.76% today so far, and the movement of the stock is probably going to be accelerated a little bit, but market makers have taken that into consideration because I've seen Verizon really move in the 4s to 6s most of the time. So they bumped it up a little bit, and the expected move right now is still single digits under 8%. All right. So the next stock on our list is IBM. So a bellwether, blue chip stock. It's been around for forever. Okay, and they are going to declare earnings on Wednesday, April 23rd, after market close. So after the market closes on Wednesday, and the expected move here is also less than 8%. Now, here's the thing with some of these stocks that are in that 8%, 9%, 10% range. Sometimes the market makers are going to be pricing options to where, you know what, we might be able to do a straddle or strangle on one of these, because if they're pricing in, say, a 4% move, and historically they expect an 8% move, well, then that could work to our advantage to do a straddle or strangle. But most of the time, with a stock like this that's up at $233, we can actually sell premium out of the money, say like the 250s or the 260s, sell those and always buy something to protect it. So sell the 255 calls, maybe buy the 260 calls. Okay, so that's a bear call spread. And then down below, maybe sell the 210s and buy the 200 or 205 puts, and create an iron condor. Okay, so there you get a net credit for that, and that's how we would create the edge in the trade, because those would require a double-digit move to experience a loss, and we're only expecting a single-digit move here with IBM. Okay. Also on the quiet side of the ledger is going to be Chipotle. All right. Now Chipotle, man, they are way off their all-time highs, and you can see here that they are in a nice little downtrend and they have been for a while. You can see a high up here, and then a little lower high back here in December, and then breaking some technical support here. And really, if you're looking at this technically long term, I could see $35 or $36 in the future for Chipotle, but right now it's trading at $45.68, and the market makers are expecting about an 8% move for Chipotle. All right. And that's pretty consistent. You can see the earnings back in February were also around 8%. And look what the stock did back in February. It just barely moved. I mean, it just kind of went sideways. And that is what is typical with a lot of these more mature companies. Okay. They're going to have a movement that is very muted, and so selling premium around these, selling options net is the way to go around these stocks. So also declaring earnings on that same day on Wednesday is Texas Instruments. All right. Now also a stock that's been under some pressure here lately. Oh, my little box. There it is. Okay. So they are going to announce Wednesday, April 23rd, after market close. And the expected move here is less than 7% for Texas Instruments. All right. So now TI has been around forever. I mean, long time. And so they are definitely in the maturity part of their life cycle. And so, again, you're going to get more muted, quiet moves here from a stock like Texas Instruments. Okay. But still, a 7% move is possible. Yet we as option traders kind of consider that more of a quiet, muted move rather than, say, a 15 or 20% move that we're going to see from some stocks coming up in a week or two. I mean, we got some real big movers coming up here in a week or two. All right. So then here's another example of a big mature stock that has been just really not doing much lately, and that's PepsiCo. All right, so Pepsi has earnings on Thursday, April 24th, before market open. Okay, so in the morning, they have an expected move, and this is what we usually see from these really big mature companies. They have a expected move right now, pricing in at little less than 4% for Pepsi. Now, a curveball here for Pepsi. If you haven't seen the headline here in the latest Coke and Pepsi war, both companies are facing some cost increases related to aluminum, and that is going to affect their bottom lines. But Pepsi is also going to be affected by a tariff on their ingredients, because one of their raw ingredients, one of their flavorings, they actually make in Ireland, and they are now subject to tariffs that are being implemented in any products being imported from Ireland. Where Coke, their ingredients are raw ingredients, their flavorings are mixed in, I believe, Georgia and Puerto Rico. All right, so U.S. state and U.S. territory. So they are not subject to those imports. So a little double layer of imports on Pepsi, a single layer on Coke, and actually, Coke was, last time I checked this morning, Pepsi was down and Coke was trading higher today on that. So that is what we expect from Pepsi. Now, Alphabet or Google, okay, they're going to expect on Thursday, April 24th. Now, this is one of those headline stocks that is a little bit interesting to play, and they will announce on Thursday, April 24th, after market close. The estimated move right now, they're pricing in about an 8% move. Okay, so you're getting up there close to that double digits where it's really kind of hard to balance out. But at $150, okay, well, 146. But when you get a stock like this, the options are hold their premium, and you can actually go out of the money. Say maybe sell the 160, buy with the 165 calls, and then maybe look at selling the 135 and buying the 130 puts or something like that. Get them away from the money beyond that 10%. If you can get them 12 to 15% out of the money on selling those legs, then you increase the odds of success on a stock like this. Okay, and then let's close out the quiet list with your toothpaste. Okay, so Colgate Palmolive. They will declare earnings on Friday, April 25th, before market open. All right. And the expected move here is less than 5%. Obviously, Colgate is just a big company, lots of products. Colgate Palmolive, and the two companies together, just massive company. And you can see that while the market has been suffering, they've actually been doing pretty well, holding themselves. The stock price, that is, holding up relatively well compared to some of the market volatility that we've been seeing. So this is more of a defensive play, but the stock is priced in to move less than 5%. And you can see that from Colgate, which declares, again, Friday morning before market open. Okay. Now, if you like this kind of content, where we talk about really what to be trading around these stocks, because, again, we're talking options and we're talking option strategies. All right. So again, with those quiet stocks, we talk like iron condors, anything that we can have a range where the stock can move and then and profit from that collapse and implied volatility after the announcement that then gives us the profit. That's what we like to do on those. All right. So let's move over to what some people might call the more exciting side of the ledger, and that's our potential for breakouts. Okay, stocks that we think, well, the market thinks are going to make big moves going into their earnings announcements. All right, and let me show you an example of one of these. Okay, this is Akamai. This does not have earnings this week. Okay, let me just qualify that. But as you can see with the earnings announcements that have been identified with a vertical line and the ellipse on there, this stock gaps around. It makes double-digit moves. 15, 18% is not uncommon for Akamai, and it makes big moves. In fact, that last earnings announcement was a 20% drop there. That really, we had a very nice trade on that using straddles and strangles. Those are the types of strategies. So we're buying premium, even though implied volatility is elevated. I know we know that, and we're buying high implied volatility because by using a straddle or strangle, if a stock gaps up, our calls go in the money, and we're not so subject to an IV crush because we have intrinsic value on those options. So in this case, our puts are the one that made money, and on that drop of 20%, and we profited very nicely. So let's get into our list here. And our first stock that we're going to talk about here is Tesla. All right. So if we jump to the chart here, you can see that Tesla is trading a little lower by over 4% today, almost 5%. Okay. But we have, you know what? I have a incorrect chart there. So let me pull up the correct Tesla. All right. There we go. Okay. Apologize for that. All right. So Tesla is going to have earnings on Tuesday. Let me just double check because believe it is after market close. Okay. So after market close on Tuesday. So I can actually just go ahead and put that on there. And after market close tomorrow is going to be their earnings announcement. The expected move on Tesla is going to be, let me just check over here. I'm going to get the latest updated. They're pricing in about a 14% move for Tesla. Okay. Right now. So I don't even know if that's going to be enough, honestly. And this is where you kind of have to decide as a trader which way you're going to go with Tesla, because again, it's a higher value stock at $223. But with all the volatility around the news cycle with Tesla and their potential, investors are getting really impatient with Elon and the stock performance here lately. So unless they announce something big, okay, we could possibly see the stock really get taken down tomorrow as investors potentially dump the stock. Okay, I think this is at a critical stage of whether you are a believer or not in Tesla. Okay, and we will see. But right now, it's pricing in at around 14% move for Tesla, and that'll be exciting to move on for tomorrow after market close. And I'm actually doing a seminar tomorrow evening on Tuesday, the 22nd, called Earnings Alchemy, and I will be covering Tesla earnings live. Actually, they'll already have the announcement by the time we start the seminar at 7:00 Central Time here in the U.S. But we will touch on it during that webinar, and I think we'll be able to post a link to that. And if you'd like to register for that, you sure can, because that's not until tomorrow. And you still have 2 days, essentially, today and tomorrow, to do that. So, there it is, popping up on your screen right now. All right. So let's get in. And believe it or not, GE Aerospace, okay, the old General Electric, they're on our list of potential breakouts too. My little boxes are disappearing. So GE has an earnings, they're right at 10% right now, looking at the cycle. Now, they have earnings also tomorrow, and they are after market close, I believe. Let me just double check on that. And no, before market open. They are tomorrow morning before market open, and they're pricing in right at a 10% move for GE. Now, again, another one that could potentially be a little bit more volatile just because of the space they're in, and some of the things that are going on with tariffs and everything could cause a little bit more volatility around with some of these stocks. Okay, all right. So let's move on now to Vertiv. Vertiv has earnings on Wednesday. There's one of my boxes. All right, April 22nd before market open, and as you can see, this is why this is on our list here. Look at this. The stock's down already 9% today. All right. And yet the expected move for the stock, again, which doesn't have earnings until Wednesday morning, okay, is 12%. Okay. And so this could be, a stock that's really volatile. And this is what I like when I see this consolidation type of move coming into the earnings announcement. And the disappointing part was we just came out of a 3-day weekend. Normally, I would have liked to have put on a straddle or strangle maybe towards the end of last week. But when we're facing a 3-day weekend, don't like to do that. Why? Because of something called theta decay or time value. Time value is eroding on our options, and I just don't want to waste that money over a 3-day weekend. All right, so this would be the period, but it's down already 9% today, and we can see some more additional volatility from Vertiv as we go into their earnings announcement on Wednesday morning. Okay, another household name is Intel, and they're going to declare this week. They are going to have earnings on Thursday, the 24th of April, after market close. This one's definitely on our radar. It has an estimated move greater than 12%, and the stock it's had its periods where it really moves, and then its periods where it does consolidate. But what's interesting here is over the past 2 earnings announcements, Intel has actually moved pretty quiet through the announcement, but within 2 days, all of a sudden just shot higher. And we're talking significantly higher, like what you're seeing back here in end of March going into April. This type of move here where, we have a consolidation and then we all of a sudden move higher. So, oh yeah, here's what I'm talking about. Look at this. Here's the earnings announcement. Consolidation for about 4 days and then big rally. So the key here is to give yourself enough time in the trade. You don't want to do anything too short, or like this Friday expiration, too short. You want to go out at least a week, if not 2 weeks, and give yourself enough time to be right in the trade. But Intel is setting up right now. Option market makers are pricing in a move of greater than 12% right now. So we'll see what happens with that. Also on my list now is Skechers. Now, Skechers is the shoe company here, the footwear manufacturer. They will announce on Thursday, the 24th of April, after market close. And again, estimated move, solid 10% here for Skechers. Now, Skechers also may run into some tariff issues. There could be some increased volatility here, but also they've been doing a lot of hardcore advertising. If you haven't seen them on social media or even on network TV and cable, they've increased their marketing spend substantially, advertising some of their footwear and bringing more notoriety. So that is going to put more eyes on the company and the CEO as they make their announcement. We'll be watching that on Thursday. And right now, market makers are pricing in a 10% move for the stock. So that stock could move upwards of $5 around that earnings announcement, and it wouldn't be a surprise. Okay. Would not be a surprise. Okay. And Saya is coming up with earnings announcements. And I know that's either Sia or Saya. Depends on if you're Italian or not. Okay. They will announce on Friday, the 25th of April, before market open. The expected move here on the trucking company is greater than 16%. Now, the problem with this stock is it is a $300 stock. Okay. Options here get really expensive. You are going to be looking at a straddle or strangle that's going to cost between $4,000 and $6,000. So this would only be appropriate for people that have larger trading accounts, and we're really talking in this situation over $100,000 in a trading account. Okay, so no $5,000 or $10,000 trading accounts trading straddles and strangles on this particular stock. But if you, I did see some option pricing that was around the 11 to 12% range. And when the overall complex, again, market makers pricing in all the options, and the average is 16%, that gives you an edge. Okay. If you can find something that is, say, 10% of the stock price, which would be around $3,200, that would be ideal. Okay. A straddle or strangle, probably a strangle of around $3,200, that is reasonable. It would need to move. It would need to make money before a 16% move. In other words, it would need to make money starting, on a 10% move or 11% move, and then the stock move 16%. That's how we make money on those types of trades. Okay, a bigger move than expected. And so they again have earnings Friday morning, and that'll be a fun one to watch. And we'll close out here on our list for this week with Charter Communications. Believe it or not, Charter is also a $300 stock still somehow. Okay, a $320 stock. And you can see they've been in a little bit of a downtrend for a while. Well, no, they did pretty well. They've they're up here at, oh, interesting. They're up here at some support right now. So this is really a kind of a perfect place to possibly do a straddle or strangle. But again, they have earnings on Friday morning as well. And again, another $300 stock. So the problem is option market makers are pricing in a pretty nice move of 12%, but it's a $300 stock. So only bigger accounts can really do a stock like Charter Communications. And even though the expected move is greater than 12%, if you find a straddle or strangle, it's got to be priced in around 9 or 10%. And believe it or not, those are hard to find. They still are out there. I still see them on a regular basis, but you do have to search for them and get that value out of the options. Otherwise, you're probably going to look at the options and they're going to be priced at, maybe 13 or 14%, or require a 13 or 14% move, and the stock may only move 11 or 12, and then you have a potential for loss. I'm going to show you an example of that in a minute. All right. So that's our list. Let's take a look at our list one more time. And you can just see that there are other companies. There's Schlumberger on Friday, Phillips 66 on Friday, Union Pacific on Thursday, Chipotle, and ServiceNow. So Kimberly-Clark also on the quiet side up there. So, there's lots of names. In fact, names that are big names like these that didn't even make the list, because those are they're right at that 10%, or right at that 9-10%. And what I try to do is filter out the biggest movers and the smallest movers and include them in my information each week, because we try to get the best information to you with the best opportunity each and every week for free right here on our show. So keep that in mind. All right. Now, please like and subscribe if you're finding this video useful or helpful to you as a trader. Recommend us to other traders, because we talk about, again, not what we're pricing in, but what option market makers are pricing into these stocks each and every week. And that is where the research is done. And we try to, as I just mentioned, try to highlight the best potential breakout candidates and the best consolidating candidates each and every week. All right. So with that, then let's get into some housekeeping here with some trades. Okay. We had an open trade on Cal-Maine Foods that lingered on for a little while. And last week, the options expired. And this was actually a trade that we did for my subscribers who subscribe to our publication, Delta Neutral Income. Okay. This is where I put out alerts for our subscribers on quiet candidates. This is an example of an iron condor. And as you can see, the earnings icon there in the chart on the left-hand side of the image with the green triangle, there was a little volatility, but we just stuck with the trade because it was still trading in between our break evens, which is identified with the horizontal light blue line there, and the options ended up right in the middle of our iron condor, and we were able to keep the entire credit that we received, the entire $1.80, so $180 per spread. $180 per spread that we took in. And if you were looking at a hypothetical $10,000 account, that's a 1.8% return on risk or on portfolio in a little over a week. Okay, so a very generous number. And usually we do these on a much shorter term, but Cal-Maine did not have options that expired. They did not have weeklies at the time. And so we had to use the standardized options that expired on Thursday, because Friday was Good Friday and the market was closed. Okay. But we did get a 56.3% return on risk in the trade. So a very good trade on Cal-Maine Foods. And just like Paychex the week before, okay, Paychex worked out. It expired worthless, even though we took it off a little early. And then here we are with Cal-Maine Foods, did the same thing. All right. So last week I put out an alert on DR Horton, okay, and the potential volatility that might occur here. So here was the trade. It was a straddle on DR Horton, and that's what it looked like going into the earnings announcement that they had later in the week. And I want to show you the potential risk that occurs when the stocks don't move. Okay, so if we advance to after the earnings announcement, they announced on Thursday morning. Okay, and the stock just didn't move. Okay, and this is where implied volatility drops after the announcement, and the stock doesn't move. Even though we had our calls go in the money just slightly, it wasn't enough for us to be able to generate a profit. And you really needed to exit this before the 3-day weekend. Okay, that's 3 days of theta decay, and we ended up losing about $300 in the trade, and that's a 35% loss on risk. Okay, 35% loss on risk. Now, a loss of $310, again, on a hypothetical account of $10,000, that's a 3.1% return loss on portfolio on this particular trade. 3.1 is a very easily recoverable number. Okay. It's when you start getting into double digits, that's when it really takes a lot of time and effort to recover back to break even. But for me, as being a professional trader and doing this a long time, 3.1%, I don't like to see it, but man, I don't mind. I mean, I can recover from that in one trade. Okay. I can have one trade go right for me, and I can recover that in an instant. So, in fact, maybe the trade that I have for you today is that candidate. So let's take a look at that. Let's see what's on the list for this week. We have Intel. Okay. And we're going to do a strangle on Intel. That gives us the best opportunity here. And this is actually appropriate for smaller accounts because this is coming in around $180. Okay. So a smaller account can trade this. You're just buying a call and just buying a put at two different strike prices. Okay. And that's how we generated that $180 debit. And we're expecting a move here of double digits for Intel. All right, so we do have a slight edge in the trade compared to where the market is pricing the options, and we want to see a nice little pop up or pop down. And with this, I used options that expire in about 10 days, so you don't want to, and that's 10 trading days. So again, you don't want to use something really short like that expires this Friday, which is about 4.5 days away. That would just be a little risky. It'd be cheaper, be less expensive, but it'd be a little bit risky. Okay, that's it for this week. Boy, we are back into earnings season in a big way, and you're going to see the numbers increase. I mean, the number of stocks declaring earnings each and every day is going to start to go higher. The number of stocks declaring each week is going to go higher for a while, and we're going to continue to get through the big names. And we have some great candidates coming up in the next few weeks. Some candidates that are very consistent performers for us. So I look forward to bringing those to you. Everyone have a great trading week, and I will talk to you again next Monday. Take care.